This trade idea that I'm about to share with you guys right now, I call this trade in my personal trading group, Forex Hybrids. And this is the trade here on gold. It was a sell, and this is the setup that I called. I give the signal, and yeah, I call this trade live in my Telegram. So stick around to the end of this video, and I'm going to break down exactly what I saw. And yeah, so guys, this is exactly what I saw before taking this trade. So first of all, I opened my charts on the 4-hour time frame gold to start my breakdown because I like to do my breakdowns from the 4-hour. That's the maximum. I don't go beyond that. So this is the 4-hour time frame. So when I opened the 4-hour time frame, I was like, whoa, I just saw this clear area of resistance here that I drew. These two lows here that rejected price really, really impulsively. Then, break structure to the downside, because if I zoom out here, you guys will notice that this market has been bearish for a while now, because the market has been creating for lower highs and lower lows, and ever since then, you know and there's also more momentum to the downside than there is to the buy side. You can see that when sellers enter the market, it's really aggressive to see. That's just to tell you that there's more momentum to the downside than there is to the upside. So when I knew this, I knew that, okay, now this is a very, very bearish bias. Then I'm looking for reasons to sell this market. When I say reasons, I mean, areas in the market that I can see as potential levels that I can, execute my trades on based off. So first of all, I saw these two, areas here. I like to, take key levels that have been rejected at least 2 times in the past. So we have a key level here that is a very clear one that has rejected price neatly 2 times, and even 3 times here. Then eventually broke. So when this happened, I knew that, okay, there is a lot of momentum to the downside. Like I earlier said, I'm waiting for a retest of this level to trade this market to the downside. So that's exactly what happened. The market entered there. Then I went down the 1-hour time frame. Then I waited for the rejection. So when this rejection happened, I was not live on the charts. This particular black candle here, this first rejection, this is where I was supposed to enter, but I was not live on the market. I was busy with something. Then when I came back now, it was like 2-3 hours later. Then I was actually live on this black candle here. Luckily, it had not dropped really well, so it was retracing back up. Then I entered this trade here, and I called this trade and shared it in my Telegram channel. So I went there and I put there, hey guys, I'm selling gold, so you can jump on it. And it's a free Telegram channel, so I don't really maybe give them the exact coordinates or everything. I just post like this. You can maybe check. As you can see, it's a live market here. The trade is still running as we speak. Then my target is right here. My stop loss is here. It is a 1.7 risk to reward. So that is it. That is exactly how, or this is what I saw. This is the 1-hour time frame. You can see here the resistance level is really clear. So now, guys, let me go back on the 4-hour time frame and maybe just say one or two before I stop this video. It's going to be a very short video. Okay. So first of all, I want to tell you guys that support and resistance is the basics of trading. Everybody that gets into trading starts with support and resistance. But people always think maybe because that's the basics, it's just doesn't work because everybody does it. No, it works because everybody does it. Instead, because if everybody's looking to sell or buy at this particular level, that means that there'll be a lot of orders in that particular area, thereby pushing price to go as intended. So as you can look, if you look on this price chart right here, you see that there are clear levels. When I mean clear, like to find to like spot them. You can see that price has rejected this area here more than 4 times. You just draw it out, but that's a level to trade from. You're either buying or selling from this level, so I'll not really give it a name. All right, that's a key level. Then here we have another area here. Price has rejected this area a couple of times with this week, as you can see here. You can also draw this level out, okay, just like that. And this is also a key level. So there to trade from here because it has bounced too many times, just like myself. These are the best trades that I like to take. I'll wait for the price to break above, just like this one that happened here. As you can see, this is relative to what I just took because I waited this level to break, then I sold. All right. So if your bias is buys, maybe on the bigger time frame, then you can come around here and wait for a break and retest. If your bias is sells, then you can still take your sell. So it depends on what your analysis is saying. So right here, this level was broken up impulsively to the upside. You can see a lot of impulse in this push here, breaking highs to the upside, like giving you the impression that this market will be bullish for a length of time before maybe, start being bearish and everything like that. And you can also see here that the market has pretty much been bullish for the past week. Like you can see here, the buying momentum here is more than the selling momentum. The highs, you can see every time the market is buying, it really produces some big, large candles with a lot of impulse and volume in it. Then when it's selling, it's just, chubby and giving a lot of weeks and a lot of mixed feelings. I call it mixed feelings. So there's a lot of buying momentum, there's a lot of push to the upside than there is to the downside. So after this period of consolidation here and indecision, where the price finally broke out of this consolidation, you can definitely buy this level because of the past data that you've gathered telling you that what the market was bullish for that length of time. Then when this level broke back to the downside, you can see that the momentum changed and everything, and then we started looking for sales. So that is how you go with the current trend, you go with the current flow of the market. That is how you are able to catch this trade. Okay, nobody's God. You'll always be right. You get wrong trades, you get bad trades sometimes. So right now I'm running this trade deep in profit. Oh, I've made a mistake. Let me go back to the 1 hour time. Oh, damn. What am I doing? 1 hour. Okay. So now we're back on the 1 hour time frame. As you can break, I'll close out some of my positions and I'll hold the rest to final take profit down here. And guys, always remember to break even with your positions, because this stop loss is here does not mean that's where it actually is. It's I put it there when I open the position. Okay. I'm waiting for this trade to go half of this. When it goes half of this, then I'll close 50% of my positions. And it depends how you manage yours. I just manage my trades the way I want. Okay. The most important thing is that you get the entry right. All right. So that is it. This is exactly what I trade. I don't do anything magical. I just come on here, I look for break, retest, and I trade from. That's it. It's that easy. So thank you guys for watching. If you enjoyed this breakdown, please kindly subscribe to my YouTube channel, because I'll be posting more breakdowns like this to help you, better your trading. Thanks. It's your boy Gislen.